Now let's take another question of trial balance is given. Trial balance as on 31st March 2013. On debit side, the cash is 6,000, purchase is 1,000, total 7,000. And on the credit side, capital 5,000, sales 2,000, total 7,000. So these are the debit balances and credit balances of the trial balance. And the closing stock at the footnote is 200 rupees. In the previous question, there was no closing stock, but we have got the closing stock now. Before I start final accounts, again, I would like to remind the rule. The golden rule is never repeat the item, never miss the item, and debit will go to the debit and credit will go to the debit. The first principle is never repeat the item, means the item of trial balance can go only once. It can hit only one account, either trading, profit and loss account or balance sheet. And secondly, don't miss the item, means if you don't take any item of the trial balance, you cannot complete the final account. And third rule is debit will go to the debit, means debit item of the trial balance will go to the debit side of final accounts, either whatever it is, trading account, profit and loss account or balance sheet. And credit item will go to the credit side of final accounts. So you have to keep this thing in your mind. So trial balance ready for you. You have to prepare trading account, profit and loss account and balance sheet. First of all, trading account. Your format is already ready. On debit side, to opening stock, then to purchases, then to direct expenses, then to gross profit. On credit side, by sales and by closing stock. Be careful. I have given you the format that there is always gross profit. Sometimes there is gross loss. But in my question, because just to make it simple, I have not created any gross loss. But when we start the final accounts in details at advanced level, then I will teach you the whole thing. You know, gross profit on the debit side, it's always balancing figure. Then the profit and loss account for the year ended 31st March 2013. On credit side by gross profit and on debit side to indirect expenses, and then to net profit. Net profit is also a balancing figure. Then the third part is balance sheet as on 31st March 2013. On liability side, first of all write down capital plus net profit. Capital and net profit will be written in the inner column and the total will go to the outer column. Now, let's take the item one by one. In the trial balance, cash is 6,000 rupees. You know, cash is our asset, so it will be taken to the debit side of balance sheet because it's a debit item of trial balance. So again, I'm going to repeat, there is no debit side or credit side of balance sheet. Just for the convenience, I'm going to assume that asset side is the debit side. Basically, all assets carry debit balances. Assets side is basically the list of the debit balances. So I can call it debit side. So cash will be taken to the balance sheet, debit side. Now purchases. Purchases on debit side, it will go to the debit side of trading account. So two purchases, 1,000 in trading account. Now come on the credit side. Credit side capital. This is the credit item. It will go to the credit side of balance sheet. So write down capital rupees 5,000 in the inner column. Now sales rupees 2,000. It will go to the credit side of trading account. Because it's a credit item, so it will go to the credit side of trial balance. So buy sales rupees 2,000. Now the closing stock. Closing stock is at the footnotes of trial balance. It is not the part of trial balance. I mean to say, it is not in the totals of trial balance. If you take any item out of the trial balance, means which is not in the total of trial balance, that will be taken twice, one on debit side and one on credit side. So closing stock will be taken on the credit side of trading count first, rupees 200. Because you have taken the outside item, now it will go to the debit side also. So where it will go? It will go to the debit side of balance sheet. So debit side of balance sheet means asset side. So an asset side, please write down closing stock rupees 200. So closing stock has been written twice. Credit side of trading account and debit side of balance sheet. Now the total on credit side of trading account is 2200, but the total on the debit side is only rupees 1000. So what will you do? To gross profit rupees 1200. This is the balance sheet figure. Now the total is 2200 on both sides. Opening stock 0 and direct expenses 0. So we have found the gross profit. Take this gross profit to the profit and loss account credit side. By gross profit 1200. To indirect expenses nil. The total on credit side 1200. So what will be your net profit? To net profit 1200. This is the balancing figure. This is the figure you have supplied to make the totals equal. So total on both sides 1200. This is the net profit. Now come to the balance sheet as on 31st March 2013. Capital 5000 plus net profit, it will be taken from the profit and loss account 1200, and the total 6200 will go to the outer column. Now total on liability side 6200, and on asset side the total will be 6200. In this way we have completed final accounts.